Okay, so the second learning objective is about prepare a cash flow statement using the indirect method. Okay, so the first step is to prepare the operating activity. Okay, operating activity. So you need to convert the profit. This is from the income statement. So net income, starting from the net income and then to cash. Okay, and I'm going to show you how to do that. And then it's the investing activity. You analyze the changes in the non-current asset. Last is the financing activity. You analyze the changes in the non-current liability and equity accounts. And then you have all this information. You can do the preparation. Okay, so the first step is to convert, okay, profit. And this profit is based on accrual basis, because you have learned this previously that when we are talking about accounting, you have accrual basis versus the cash basis, right? So profit on the statement prepared and using a accrual basis is not equal to cash, okay? So the profit, the net income, is not equal to the cash. Okay, so we have to make some adjustment to get the cash. So the adjustment goes like this. So you add back non-cash expenses, such as depreciation. You add losses and deduct gains from investing and financing activity, because the cash related to the gain or the loss was not in the operating activity. It's either in the investing activity or in the financing activity. So when you have a loss that reduces the income, you have to add a loss back so that there's no cash effect, right? Because the loss does not reduce the cash for the operating activity. And then you consider the changes in non-cash current asset liability. You need to add the decrease in the current asset and the increase in current liability. So when your current asset decreased, that means it's releasing the cash, because current asset is converted to cash, right? So if your current asset balance decreased, the reason why it's decreased is because it's converted to cash. So that's why you need to add this cash. Increase in current liability. If your liability increased, that means you didn't pay using cash. That's why you owe more money. So you are saving the cash. So that's why you have to add the cash. So on the opposite, if your current asset increase, right? The reason why your current asset can increase is because you use the cash. So you have to minus. Decrease in current liability, right? How can you decrease your current liability? You have to pay it, so your cash is used, okay? So you can see that this is the format. You add back non-cash expenses, for example, depreciation. You add losses and deduct gains from the investing financing activity. You add decrease in current asset and increase in current liability. You deduct increase in current asset and decrease in current liability. So on Thursday, I will show you why. Okay, for today, I'm only just telling you this is the way we have to do it. But on Thursday, I'm going to work on a problem and I will show you why. Okay, this is the way to do it. Okay, so this is useful. This picture is useful. It tells us to add depreciation expenses, add loss, deduct gain. Then you can add decrease in current asset, add increase in current liability, deduct increase in current asset, deduct decrease in current liability. Okay, so this one is important. If you don't know, maybe you have to write this down to your note for the final exam. But I hope that over when you practice on more questions, okay, you practice more questions using the assignment, and also when I explained to you using my examples in the class, it should be okay, should be more clear. So in this example, they follow the format. They start with this profit for the year, and then they add 9,000 depreciation expenses. They add the loss on sales of equipment, and then the accounts receivable is AR, so AR decrease. Okay, so then it's add, and then increase in inventory. So the inventory is a current asset. So increase in current asset, you deduct. Increase in prepaid expense, you deduct, right? Prepaid expense is current asset. Accounts payable, that's liability. Increase in liability, you add. Income tax payable is liability, decrease. So you use minus. Okay? So that's how you do this type of question. Does that make sense, Pika? Just conceptually, this is a procedure. Are you okay? Okay, so step 2 is the investing activities. So this is about the effect on the long-lived asset. Okay, so for example, you purchase a building. Well, that costs you 120,000, so that should be a minus, right? You purchase equipment, cost you 25,000, that should be a minus. You sale of equipment, right? Sometimes you sell your equipment, you sell it for money, so that's an increase in cash. So financing activities, they analyze the changes in the long-term liability and the equity. So for example, when you issue common shares, right? You issue the common shares to your shareholder, they give you money, so your cash increased. Payment of cash dividend. So if you give your shareholders dividend, you have to use your money, right? You have to give your money to your shareholder. So you use your dividend, use your money, so that's a minus. Okay? So together, it's a minus $9,000 cash. So here, that's the minus $9,000 cash. And from operating, you have a positive 172,000. From investing, you have a negative 141,000. From the financing, you have a negative 9,000. Total, you have a 22,000 plus. Your opening is 33,000. Your ending should be 55,000. Does this make sense, Pika?